be a great asset manager, you've got to be inquisitive. You've got to ask a lot of questions. You've got to dive deep. You've got to be an investigator and figure out, what's going on, what could be doing better, breaking everything down to its simplest task.
Welcome to the Threefold Real Estate Investing Podcast. This is the podcast where you'll not only learn how you can achieve massive success in multifamily real estate investing, but also how you can simultaneously pursue great relationships with your family and a better walk with God. You can achieve financial freedom through real estate investing without sacrificing the relationships that mean the most to you. Now, here's your host, Lee Yoder.
Welcome back, Threefold listeners. Hope you're having a great week. Got another great guest today. Gary Lipsky is joining us. A little bit about Gary. He is a multifamily syndicator who currently has $65 million of assets under management. He's the president of Break of Day Capital, whose mission is to positively impact the lives of their investors and the communities in which they invest through the highest level of transparency and fiduciary responsibility. He's the host of the Real Estate Asset Management Podcast. I got to be a guest on there. It was a lot of fun. He speaks with various experts in the real estate industry to help educate asset managers. Gary's also the best-selling author of Best in Class and founder of the Asset Management Summit. Gary, welcome. Thanks so much for making time for us today. I'm excited to talk to you.
Yeah, I'm excited to talk to you as well. Thanks for having me.
Yeah, absolutely. So Gary, if you don't mind, can you take us all the way back to when you first got into real estate? What were you doing? And then what got you excited about real estate?
Yeah. So I was, probably late 20s. I'm looking to buy my first house, and I wasn't looking at like our parents looked at a house like this is my forever house. I was looking at it as a way to build wealth. I had no money. I was in debt. Prices. This is 2002. I bought my first house. I've been looking for a bit, and prices have been jumping then. And, here I was buying a house for, I think it was on the market for like 440 or 430. I bought it for 470. And I'm like, oh my God, I'm buying a $500,000 house. This is, 20 years ago. This is crazy. And yeah, obviously that house is worth, 3 times as much, but I bought the house. We converted the garage into an office space. I owned a business at that time. And so I knew I was going to get some rent money. So I was kind of house hacking at the time. Okay. And then we eventually opened up the kitchen. We did some rehab, and I kind of learned how to work with contractors and how to look at a piece of property and maximize the value. We ended up selling that a few years later and moved on to another house and did some work on that, and then turned that into a rental. But single family on the very small side was my entryway into real estate. Okay. And knew that so many other people made tons and tons of money from real estate. So I wasn't looking at it as a career at that point, but I enjoyed investing in real estate.
You started to see some of the power of it. The window was kind of open to you. You see other people doing even bigger things, doing it full time, buying, maybe even apartments. Yeah. I think that's the first step to me. Feels like almost everybody has no idea that real estate exists out of just buying a home just for yourself to live in, not even to rent out the garage, not even, do nothing to make money off of it other than, hey, hopefully it's worth more someday. But even to most people, that really doesn't mean that much because they'll probably sell it, take that equity, and buy another more expensive house. So at least your mind was open a little bit to real estate as an investment. So you're kind of going down that path. During the time, Gary, was a company called ARC, the after school program that you built. You ended up selling that in 2000. Can you tell us just a little bit about that? Because that just seemed really interesting.
Yeah. So we ran after school programs on school sites. Yeah. We ran outdoor education programs. So we had portable rock walls, kayaks, mountain bikes. We took kids rock climbing and camping, and a lot of those kids lived in really tough neighborhoods. So we were expanding their universe, opening up their minds to what was possible through these adventures. Awesome. And then we had a big leadership program as well, and mostly with non-leadership kids. So we were giving them a voice. We did like anti-smoking campaigns at schools, and the kids were running the programs. We weren't telling them what to do. They would design it. We'd have, a big thing during lunchtime, and, speakers and whatnot. And they played music and talk about different things, and would design artwork based on anti-smoking campaigns, anti-violence stuff. So it was super, super rewarding.
Sure.
When I sold it, we were working with 9,000 kids daily throughout Southern California.
Wow.
But I had been doing it 15 years, and I built up a really good team. They didn't need me to keep on going. So I thought it was a good time for me to exit and get into real estate full time.
Okay.
I had been investing more so, and wanted to really focus my time and energy on that. And so it was time to move on.
Yeah. I just want to hit on that, Gary. I mean, that's awesome work that you guys were doing, and what a great program. I'm glad it lasted beyond you and is just doing so many great things. I just think of my sister. She's, a small example. She teaches at a low income school, and they'll do things like bring fruit in, and these kids have never tried a blueberry before. Yeah. I mean, just to open their eyes to like, here's fruit. But yeah, what you guys are doing, like, man, there's a big world out there. Go out in the nature, do these things, and don't smoke, don't get into violence. Like, go enjoy the world in a good, positive way. That's awesome stuff. So, and I thought that might have something to do with, part of why you sold in 2016. So tell me like a little bit about where you were with real estate in 2016 and what allowed you. I mean, yeah, it was a good jumping off point for ARC and the after school program, but also it sounds like you had a landing spot. So tell me kind of where you were then in real estate.
Yeah. I've been looking at fourplexes and eightplexes. And so I took that time to, learn as much as I could, and found my way to multifamily, and thought it was a good fit for me because it's like running a business. And I've been running businesses for many, many years.
Yep.
And so, I started, going to meetups and mentor groups and listening to podcasts and educating myself as much as I could. And ended up, at a meetup, met a guy who, had the same work ethic, and we were looking in the same market. So we ended up partnering together. And so instead of me trying to buy a 12 unit where there was less margin for error, we bought a 42 unit because we were able to partner. We bought that for $1.65 million. Our next property was a $15.3 million purchase. So we were able to jump, but because we had developed relationships with other people that, we could partner with, and felt like we can do it and take on the next challenge. And, that's the beauty of real estate. You could partner with different people to grow fast.
You had the business background, so you knew, and I totally agree with you. I tell people all the time, if you want to get into multifamily, you've got kind of two routes. Do you want to just build a small portfolio in your hometown or, the cities around you and manage it yourself? And I mean, obviously you can do things a little bit differently, but like you can do that and build a great portfolio that could absolutely allow you to retire and probably live the life of your dreams. Or you can go build a business and buy big apartment buildings. So I kind of totally agree with you, because you made the point, hey, I want to, had this business, I want to go build a business, and bigger multifamily lends itself to that way. But I still think if you go that route, Gary, you kind of still have two options. You can still kind of start small and like just keep stair stepping up. So you could have went and got the 12 unit, kind of done it all on yourself, but maybe have a property manager. And then, hey, okay, next I'm going to go do a 50 or whatever. But you partnered and jumped much quicker. Just with your experience, Gary, would you suggest people do it the same way you did? Would you do anything different? How would you go about getting all the way into buying big multifamily?
Yeah, sometimes we're in meetup groups and someone sheepishly says, I have a 12 unit or 16 unit. I'm not nearly as big as you. I'm like, we all started somewhere, and your path is different than my path, So I always say, just get started where you are and do what's good for you. So I don't think there is one particular right way or wrong way, but for me, we thought it was easier to have, a much bigger property with a 42 unit. You're going to get some turnover because it's a part-time staff. So maybe the property management company can allocate 20 hours to another property or whatnot. But there was only so much we can do with that property, and we really maxed out the value in a very short amount of time. So going bigger was a better play. Now, to be honest with you, we reached out to a lot of partners that said no to us, that didn't want it to be a part of it. And that was a little worrisome at one point, but I mean, we believed in the product. We had seen enough properties to say this is a good deal. You might not know this market, which was Phoenix, and it ended up being a great investment. We doubled investor money in under 2 years.
Fantastic.
We certainly rode a wave. It wasn't. We weren't hitting out of the park from day one.
Yeah.
Yeah.
What was the second? How many units was the second one, Gary? You said
128.
128. Okay.
Yeah.
So like you said, you're scaling quickly, and a lot of that has to do with partnering. So you found a partner right away. So, two guys were, rowing in the same direction, get that 42 unit. But then it sounded like you partnered even again to then go get a much bigger one, 128 and, 10 times as big almost on the rate or the purchase price and all that. So you're growing quickly. And then just more scaling from there, Gary. You kind of just continued to rinse and repeat since then.
That was the dream at the point in time, but we went 15 months without a deal after that. I mean, it was, COVID kind of hit and we were close to a couple deals. It fell out. One deal, we wanted a $400,000 discount. And, at the beginning of COVID, we went back to them and after a month and said, okay, things have settled down. We'll pay you what you wanted. And they're like, no. They sold it for $1 million more than our original price, probably 2 months later than that. So crazy times. So we went, we went dry for a while and it was very, very frustrating. After 15 months, we closed 4 deals within a year after that. So then it really started to pick up. And it gave us time to build our platform and to get better at what we do. We wrote our book, we did our podcast. And so if there was things we wanted to learn, we'd bring people on to learn from their experiences. And, we just got better at what we did. So we were setting ourselves up for success during that time. We weren't just like, oh shucks, we don't have another deal. We were constantly trying to improve.
Sure. Yep. No, absolutely. And that unfortunately, I mean, that's the life of buying apartment buildings. I mean, because you can go 15 months, but then, over the next 12, you buy 4 units and you look back and, well, over the last 2 years, you've bought 4 properties. It's awesome. But during 15 months of that, you got none. And it's absolutely how it works. So you gotta be willing to stick with it. I'd love to jump in a little bit more to asset management specifically, because you wrote the book on it. What separates you from other operators, I guess? What do you do better? What would you coach other people to do better as an asset manager?
Yeah, I think is our focus on asset management. It's not just, chasing deals and relying on the third-party property management company. Now, you've got to manage the manager to maximize your deal. And, a lot of people just trust them, and that's not the way to go. You got to make them part of your team and feel like there's ownership thinking. So they're going to go that extra mile. And having those consistent weekly meetings, going over all the data points, diving through all the financials, and it's tough going through all that. It's time consuming. This isn't like you said. It's not. People think it's easy. It's not. It's a lot of work, and I think a lot of people aren't as consistent as we are. And there's a lot of great operators out there, absolutely, and there's a bunch out there that just don't take as much fiduciary responsibility as they should.
Yeah. I'll tell people all the time, Gary, you can use third-party management. We do. And I wouldn't do it any other way, at least not for right now. But that does not mean that we're not managing the property. I mean, you're absolutely right. You have to manage the manager. One thing you talk about, Gary, I think is the pillars for asset management. Do you want to go over that with us real quick? That'd be really helpful.
I didn't even come up with this. Someone else, I said the words and they're like, oh, there's an acronym, MAP. The first is everything needs to be measurable. What gets measured gets managed. You got to see that incremental improvement. You don't need to go from 0 to 100 overnight, but if you go to 0 to 1, in 1 week, then to 2, then to 3, and that incremental, you'll do far better over the long haul. So, KPIs, constantly seeing, we'll use Google Docs for our weekly reports. And so we could measure it over time, see everything. We also connect RealPage to the property management software. And so they'll spit out all the KPIs that we want to see. It makes it a lot more digestible. And then we can dial into certain things. We'll break everything down we don't look at occupancy as a whole. We'll look at every single unit type. If 4 out of the 5 unit types are near 100% occupancy, we're going to push those rents. And if one is not performing well, then maybe we bring that down just a little bit and see. Versus that one unit type could be bringing down your whole occupancy, and you're realizing it because you're not breaking it down. So
yeah, so if you tell your property manager just to lower rent on the whole, you could be making a really bad decision.
Yeah.
Right.
Yeah. So A is accountability. You've got to have accountability on your team. And so through our Google Docs on our weekly report, we'll have all the things that need to get done on a weekly basis. So when it's due, who's assigned to it, and we'll put a name in there. So if that next week comes up and it's not done, you look, pretty stupid. So it gets things done. And it's also a good reminder to follow things up because people write notes on pieces of paper. I do. And so it's good to have something there for everyone to see. And, if you forget something, you can go back. Didn't we talk about pet rent like 2-3 weeks ago? What did we say? And you can just go back and see it. So it really holds people accountable.
It does, Gary. And even between my partner and I, we keep a Google Docs sheet. And it's for the same reason. It's for me, for myself. We put it up there and we'll keep checking on it. And I can say, hey, you said you were going to do this, and you said you were going to do it last week, and you didn't. Now you're saying this week, But same for me too. If it doesn't get done, it carries over, and we keep tracking it. So absolutely, of course, you should do that with your property manager as well. What's P?
Proactiveness. Everyone can do this. It's not like I'm not using my 30 years of business experience to be proactive. Anyone can be proactive, and it's not waiting for something to happen. It's if 4 months down the road, I know 25% of my leases are up, that's no bueno. I want to make sure I'm signing, 7, 8, 9, 10, 11 month leases from that month, and maybe 13, 14, 15 to make it even throughout the year.
Yeah.
And just looking at there's tons of data to be looked at, and being proactive, not waiting for it to happen. This way, when COVID hits or Texas freeze hits or whatever, you're ahead of the game, not behind. And then it really puts you in a bind.
So all these things, I love all of those. We try to do these, but I'm taking notes here so that we can, I love some of the things that you've said. I imagine, to do all of these and do all these well, you probably have to have somewhat of a team. Can you tell us about how, sure, and maybe you talk a little bit about how the property management is part of your team, but in-house, do you have different team members that are doing different things? Can you talk a little bit about that, of how you've set your team up as far as asset management?
Absolutely. In the beginning, we were doing it and learning as we were doing, which is a great start. But I have an operations person, and she'll help like withdrawals or grabbing information for me on Yardi or wherever it needs to be. I do now have an asset manager as well that helps and monitors things. So yeah, it's definitely a team sport. And as you continue to grow and add more assets, you need to grow your team. Otherwise, my assets aren't going to perform nearly as well as I project it to be. I need help. So we'll continue to grow our team as we add more assets as well.
Yeah. So it just kind of happens organically, Gary. As you grow, you start realizing I can't keep up with all this, and we have enough to add this piece. And then you go, how do you go find that person, Gary? I'm asking for this for me personally.
And I would suggest don't wait until you need that person, because it'll be too late. If you can, try to be ahead of the game so that they can get trained up, because it's not like, they're going to be magic, from day one. But I think we used Indeed, for our hiring. I know there's other companies that can help search and find that person. But our operations, first she was basically an executive assistant, and then she was doing all the behind the scenes stuff for me. And so I gave her the bump in title, and she's been great. When we have a new deal, she'll handle all the paperwork with the investors, answer, their questions, get them set up, and really allows me to focus on what I do best. And the asset manager was, these days it's people want a lot of money, and it's tricky because you either need to hire a partner, or there's a lot of people that want to be GPs. So you've got to be wary if you're hiring an asset manager and they want to be a GP. they're going to leave you in a year or two once they get their business up. So I want someone that's going to grow with me and stay with me for many, many years. And is not focused on being a GP. I need them to focus on being being the asset manager, and I'll reward them well for that.
You don't have in-house property management, correct, Gary?
No, I don't want to. People ask that all the time. So when we were talking about ARC, I mean, we had over 700 employees, 700 independent contractors. It was oftentimes a low margin, thankless job, much like property management. They call you when things go wrong. They don't say things are going great, So it's a tough business. And I'd rather focus my time and strength on getting deals in asset management versus having, there's, constant staffing woes and whatnot, and let the property management company deal with that. I'm looking for a really good regional property manager that can coach a property manager and that has a good team behind them, so they can help with marketing, the CapEx projects, stuff like that. And they know the market well. They have all the vendors that they've used for 20, 30 years.
Yep.
And I can rely on their market analysis as well. So I think they bring a lot to the table that I'd much rather, pay them their fee and not have to worry about that myself.
I agree. You can really have a good partner in a property management, but yeah, it can get frustrating. And often when you find a good one, they are expensive.
Maybe I would reconsider down the road, but I don't. Once you have your own property management company, then you're forced to do more deals in a way. Not everyone, but you want to have a certain scale ability, and I want to be more nimble and can adjust. If multifamily just becomes so overly priced, then can I adjust to self-storage or the adaptive reuse or whatever? And if I have a property management that's getting fed by my properties, I don't have that same nimbleness.
Good point. Yeah. Another great point, Gary. I always ask, what's a key ingredient for someone to be successful in real estate investing? Since you're really good at asset management, you've written a book on it. Let me just ask you that. What's maybe a key or two for someone, maybe kind of getting into it to make sure they are successful as an asset manager once they do take down, an apartment building?
To be a great asset manager, you've got to be inquisitive. You've got to ask a lot of questions. You've got to dive deep. You've got to be an investigator and figure out, what's going on, what could be doing better, breaking everything down to its simplest task.
Gary, I know you had kind of told us before that you're very much invested in your family as well. You have daughters. So I always like to kind of transition a little bit and say, hey, what has real estate done for you there? Because, to me, and I think you and so many, real estate's fun. It's great. It's financially rewarding, but it's really, for most people about the time freedom, about building a life that you want. So, hey, it's great to have success. So I'm glad to get these tips from you so that we can be more successful asset managers, but hopefully that leads to having a successful life, which means, good relationships, especially with the people we love most. So what would you say, is a key ingredient to, while you're having success in real estate, specifically as an asset manager in multifamily, how can you also make sure you have success, as a father? Like you are to your daughters, and maybe build that out a little bit. What are some things you do to make sure that you're keeping your priorities straight?
Yeah. I mean, at the end of the day, that's the most important thing. Your family, making sure you spend the time, and I think it's them seeing my success has certainly been an inspiration. And whenever we're out on adventures, we like to go hiking together and whatnot.
Great. Yeah.
Just to talk about setting goals, where I've been successful, where I've struggled or failed, and openly talking about that, because you're going to fail a lot more than you're successful, but it's your perseverance and whatnot, and allowing them to know that they can fail and what they learn from it and how they can get back up. And that's really important, because as a society, we don't talk about that as much. We talk about our successes. And if the kids know that they can fall flat on their face and survive to the next day,
right?
because they're under so much more stress than when we were as kids with social media and whatnot.
I know.
Just trying to instill that in them, that we all struggle, we all have tough days, and
it's okay.
And
yeah. I love that you go hiking with him, Gary. We're definitely into hiking, and there's just not many things you can go and do, and you're just gonna have quiet time to talk for like 3 or 4 hours. You're right. Like, you go to a restaurant, it's probably only going to be an hour, and there's people around you talking. And like, when you get out, like you're saying, talking openly, that can't happen everywhere. You might not want to talk about certain things with people sitting all around you in a restaurant. You get out in the woods and you're out in solitude just with somebody I think everybody should do that. That's really cool. I think that's great advice. Hey, I always like to get a book recommendation at the end. Tell us a little more about Best in Class. The title's Best in Class, and you had a co-author on it?
Yeah, Kyle Mitchell was the co-author on that book, and it's A to Z, asset management, and it's cool. I get someone reaches out to me on LinkedIn at least once a week and say, "Hey, I loved your book, learned so much." So I'm glad it was helpful for everyone, and it certainly makes me a better operator too when I had to write it.
Oh, I'm sure. Yeah, absolutely. They always say, if you want to learn a topic really well, teach it. Go teach it, because it's going to force you to learn. So absolutely. Hey, I want to make sure we've got. I want people to be able to go check this out. We'll put a link to Best in Class for sure, so people can check that out. Because I'm right there with you, Gary. Everybody knows you got to buy right, and it's very difficult to do today. But I'm always telling people, it doesn't matter that much if you don't manage it right. And I almost think people don't think about that enough. And that's why, we really try to get the property management piece right. And because we use third-party management, so we really try to get that piece right, but it's really on us. We've got to pick the right property management, and we got to stay on top of them. So definitely put that in the show notes to send people that way. You've also got breakofdaycapital.com. And then are you pretty active on YouTube, Facebook, and Instagram? Is that where
send people those places? Can reach me and connect me.
Perfect. Okay, we'll do that, Gary. And hey, man, thanks for all this great information. Like I said, asset management is so important. You can do really well with a bad deal, or do a lot better than you probably should have done with a bad deal, and you can ruin a good deal if you don't manage it correctly. So, people should really look at getting your book. Thanks for what you shared today. These 3 pillars of measurable, accountability, and proactive are right on. Like I say, we try to do all those, but I was definitely taking notes because it's something we can definitely do better. The way you're tracking things and keeping up with people, assigning people things so that they're accountable. It's all really good stuff. So thanks for coming on today. Before I let you go, I always like to ask my guests, Gary, how might my listeners and I be praying for you in the coming weeks?
Just good health, and everything else comes, will fall into place after that. So
Yep. Good health for you. How many daughters do you have, Gary?
2 daughters, 16 and 19.
Okay. You need prayer for that then. I know you do. I've got an 8-year-old, and I'm so worried. 16, 19. We'll pray for your health and while you're trying to raise those 2 daughters.
I appreciate it. Thank you.
Great. Thanks so much, Gary. Appreciate your time.
Thank you for joining us for another great episode. I hope you'll take action on what you've learned today. If you enjoyed today's show, please consider leaving Lee a 5-star rating and review. And check him out on threefoldrei.com. Until next time, 1 Timothy 6:17.